Hi there, Stan, the Annuity Man, America's annuity agent, licensed in all 50 states, the top agent in the country, the tallest agent in the country, the pioneer of contractual guarantees only, married for 37 years, 2 daughters. I don't know. That's about all I got. Topic of the day is transferring your retirement annuity contract if you want to, if it makes sense, and we're going to talk about that after this. This is an important topic because a lot of agents look for annuities that's already been sold and then they try to flip them, twist them, churn them, however you want to say it, into another one to create a commission. Now, that's illegal and it is a horrible practice that is happening across the country. So when we're talking about transferring, I'm going to get into the weeds of Roths and IRAs and all that stuff, but let's just 30,000 foot view about transferring. The annuity industry has tried to prevent this practice, but it keeps going on. What they have done is, if you said, I want to transfer this annuity that I purchased to another annuity, and you wanted to use us, we would have to prove mathematically that where you're coming from and where you're going to, that where you're going to is better for you contractually, not hypothetically, not theoretically, contractually. And within the application, there's a side-by-side comparison that my team has to fill out of your policy and the new policy. And you're saying, well, that sounds pretty darn good, son. They got my back there, son. Yes, if the person filling out the application is honorable, you are correct. And annuity companies will not take the transfer if where you're coming from is a better deal for you. And that's a good thing. But what happens is there's some shenanigans, as they say in Ireland. Do they say that in Ireland, Big C? He's behind the camera. Shenanigans? There's some shenanigans in the paperwork, where in other words, they'll juice the numbers to where it looks like where they're going is better. I'm not sure if that's a felony, but it's darn sure a misdemeanor. You know, it's like filling out a mortgage loan incorrectly. That's a problem. Okay, it's a problem when that happens. So there are guardrails involved to protect you as the consumer. Okay, I had just had a financial journalist, Terry Savage. If you've heard her, go to terrysavage.com. Very nice lady. She's the first female board member of the Chicago Board of Options. Just really smart. And the last article she wrote, and I helped her on it, was about this topic, about agents taking old annuities and flipping them and twisting them. They call it twisting for whatever reason in the industry, but I call it flipping, churning that to create another commission. And a lot of times agents will use, well, I got this upfront bonus and that'll make up for any type of surrender charges and all that stuff. That's just total nonsense. I'm just going to tell you right now, because upfront bonus is not free money. It typically goes to the income benefit side. But again, let's just say that the agent's pitching that. It still has to mathematically work in your favor going to the new contract. Let's go backwards a little bit because I was on a soapbox there, but you needed to know that first. Let's just say you have an annuity inside of your IRA and we have run the math and it makes more sense for you to go to another annuity from that annuity. You can transfer IRA to IRA. So in other words, the new annuity company that you're transferring to establishes an IRA so the money goes non-taxable event from one IRA to the other. Same thing if you had a Roth IRA and you had an annuity inside of the Roth IRA and that was transferable and it was proven that it's better contractually for you to go to a new policy, Roth IRA to Roth IRA, non-taxable event. If it's non-IRA money, what we call non-qualified money, checking account type money, and you have an annuity inside of there, the IRS has a section called Section 1035 of their code, and 1035 says you can transfer from one annuity to another annuity, and it's a non-taxable event, does not trigger any taxes. So the topic of this was transferring annuities, transferring your retirement annuities. It can be done. I have a team in place, my policy delivery team, that's all they do. They make sure that things are in your favor, and then when the transfer happens, we take care of everything from start to finish. But let me go backwards again, and let's revisit that agent trying to convince you to move from where you are to another annuity. First thing you need to do, you can engage us, you can schedule a call, we'll help you through the process, or you can call the annuity company that you're currently at. And when you call them, there's no agents on the phone. These are customer service people that are going to pull up your account, look at it on a screen, and they're going to tell you the truth. And you're going to ask them, what's the lifetime income stream that I would get from your company? Don't have the agent do it. that's trying to sell you something. You do it. You call them up, give them your policy number, and ask that question. Most of the time, if you have an income rider attached to your policy, you're going to have to stay at that company to get the highest payout. So let's do a draw a line down the blank sheet of paper exercise. Draw a line down the blank sheet of paper. Index variable annuity on this side, income rider value on this side. Two separate calculations. This income rider side is always going to be higher. 99.999999%, always going to be higher. So if you're transferring, you're not transferring that higher amount, you're transferring the accumulation value amount. Ran into a situation the other day, someone was trying to get flipped into another annuity. Accumulation value was $400,000, income rider value was $650. And Johnny Appleseed agent was trying to flip them with an upfront bonus. Didn't matter, upfront bonus goes to the income side. But what was going to be transferred was the 400, not the 600 plus, okay? Mathematically could never work unless he lied on the application. Now, why do carriers do that? Obvious reasons. They want you to stay with them. That income rider, knowing that it's going to be higher, and by the way, the annuity companies know that makes that policy very sticky, meaning you have to stay, and that's okay. I told Terry Savage, who was doing this article, I said, I would say 90 to 95% of those situations that we review, 90 to 95%, I want you to hear me clearly, we advise you to stay at the policy you're at. Why? Because the income rider doesn't transfer. Income rider's monopoly money in a phantom account that you can only use to determine the lifetime income at the time you want to take it. Here's the other bad thing about income riders. Bad because people just aren't educated, but that's why I'm here. Over 60% of people that own income riders never turn them on. They just look at them. They pay the fee on it and they look at it. They go, look, Martha, this worth $650. Yeah, but when you die, poof, your death benefit is the accumulation value. So people say, well, when should I turn it on? Soon. You bought it for lifetime income, turn it on. Transfer the risk for the lifetime income. But don't have Johnny Appleseed agent try to flip you before you prove to yourself mathematically that there is a better deal out there. That sometimes there are. It's very few because annuity companies want you to stay. So going back to the other part, transferring it, not a problem. My team does that, and all of those transfers are non-taxable events. They do not trigger any taxes. They go from one to the other, and the cost basis goes with it, all right? But be careful out there. I mean, if there was ever a consumer alert video, this might be it. Because there's a lot of annuities out there that have been sold over the past 10 years that are maturing, so they're out of surrender charge, and that income rider's been growing. And that agent's salivating because they see that asset and they're going, I can flip that. I can flip that. I can make 7 to 9% on that asset. Well, you know what they should be saying? Hey, that's great. You bought that. What's the income benefit on that contractually? And then they should say, which is what we'll say, let's see if we can beat it. We probably can't, but that's our job. That's it. I guess conclusion, don't ever transfer an annuity for an upfront bonus, ever. Okay? Go to my site, run quotes, schedule a free consultation call. And also too, above my head, you'll see a little clock ticking. There's a link to a video that explains how our process works. Everybody in the building's licensed in all 50 states, nobody in the building's on commission. They're not hammers looking for nails. They're good people. They're going to listen. They're going to tell you the truth. So it's a tough topic, but I'm glad you tuned into it because maybe you're going to save yourself from a bad sales pitch. My name is Stan, the Annuity Man. See you next time.